Welcome, welcome, welcome. What's going on, my beautiful people? How are we? I hope we're all amazingly well. I hope everyone had a great weekend. And of course, you know what time it is. We're here to do the weekly markups. Now, some of you may be wondering, why are we doing this on a Tuesday? Well, it was a bank holiday yesterday, and I spent the day with my family enjoying time, just taking a little bit of time out, which is important. So don't forget that, guys. If you're watching this now and you find that you're overwhelmed with work, you're overwhelmed with life, it's always important just to take a few minutes out, even a day or so, and just take a step back from, the 9 to 5 hustle, and just really enjoy the more like wholesome parts of life. Make the most of it, decompress, and ready yourself for work once again. Remember, without working, you can't live, and without decompressing from work, you can never work properly. So you always have to find that balance. So this is your message from me to do that. Make sure that you don't allow yourself to become consumed and your time to become nothing more than a way to earn money. And we all know that with Forex comes freedom, and one of those freedoms is time. So take the time and enjoy it. So that's enough philosophy from me. I just want to start by saying thank you very much to everybody that supported the last video and all the videos before this. The support from you guys has been amazing. We know that you guys appreciate it. And of course, let us know how you find this video with a little like and a comment down below. That would be awesome. And I would really appreciate that if you find it valuable in any way. We are also only 5 followers away from meeting the goal that we set at the beginning of last month, which was 500 followers. We are so close to that 500 follower mark. We're literally 5 followers away. So if you're not already following us on TradingView, head over to TradingView and find me and my coin profile picture, looking like the Queen straight on a 20p piece. Hit that follow button, I really would appreciate it. So, enough jibber jabber. Let's get into what we're all here for, which is the Forex pairs markups, right? That's what everyone's here for. That's what we're all looking to get involved with this week. Anyway, that's what I'd like to think. So, 2 markups, as we have shown you for the last X amount of weeks, probably going on months, maybe even best part of a year. Gold and euro. Focusing in on the 4-hour time frame, looking at probability in terms of movements across the overall week itself. So if you are new here, I do recommend you skimming back over some of the previous. I think last week's session was how to create a bias, or maybe even the week before. So if you haven't already, go and watch that, and that will give you a real nice breakdown and understanding of how we actually come to the conclusions we do within these markups, and why we're starting to mark certain areas, why we ignore others, and so on. So first of all, let's start with euro. This was the first pair that we gave out, and as always, there is literature to go with the charts. If you want to read that, then you can find that on the TradingView account that we mentioned earlier. The link for that is down in the description. Also, some great events coming up this week in the Discord, so if you want to be a part of that, link for that is also down below. So starting off this week, we gave out the idea here with euro that we only have a couple of scenarios in play here. Now, a lot of you are going to look at this and think, this is some basic ass shit. Why is it that it's so basic? Well, number one, the more complex you make your predictions, you're pretty much trying to predict the future here. The more complex you make your predictions, the less probable they are to ever come to fruition. Secondly, there's only 2 ways the market really can go that we want to trade it, and which is up and down. So why add more than the key points within the markup? So the points that we have this week is that we have a relatively large range to the upside. We took out previous highs, we swept previous lows, and we're building a trajectory which tells us price action is traveling up as a collective. very clear to see this, and we called this on the last week's markup, which was more bullish price action for this week, and then we ultimately got that move. So the same thing is occurring now. We have a liquid high, which was formed last week. We have a range low, and we have 2 points that I am mainly looking at. One being the area of direction right here. Now, many of you look at this and say it's a trend line. Call it what you want, but this is the overall trajectory for Institute. So it's the direction they're taking price in. It doesn't mean that this line's going to be respected. It doesn't mean it's going to be retested. It doesn't mean it's going to be, support resistance. It's just the overall general direction. Where are the investments taking place? The average accumulates across the lows here, and it causes us to suspect that price action should continue traveling in a relative movement in that general trajectory. So we have this point right here, which is where we have a crossover between the overall trajectory of price and the areas of supply and demand that ultimately create these kind of movements. Now, in this case, it's an area of demand, and we're looking for price to potentially be bought up from this. Now, again, we do have several areas lower down that we could mark and we could bring into the overall markup. But within a bullish narrative and a bullish range, the scenarios are lows remain, highs become taken. So notice how the 2 bullish ideas we have sit below the 50% of this overall high to overall low move, giving us a pullback and continuation of a very simple bullish directional movement. Okay, very, very simple. So within this range, we of course know that price does not have to pull back. So we have a scenario of price just running the high and continuing higher within here. So the first area that I'm going to be looking for longs is in the same average area of the rest of the lows, which is going to bring us around to this point. Now this point also sits relatively close within the higher time frame order block, which is the high to low move within here, brings us around the 50% of that order block. So there is a chance that price action could react and go higher from here, ultimately taking us up to the target that we have placed on the higher time frame. Now, of course, if price action decides not to react within this area and it actually starts to fail in this overall average direction, we can look for price action to sell through into this area of demand. Now, the same thing is happening here. If we hit this area of demand and price does not show us any signs that it wants to go bullish, we're looking for this low to be taken and ultimately a deeper pullback to occur. That brings us onto the higher time frame, which is above the 4-hour, overall into a bigger pullback and more of a bearish movement across slightly higher time frame. Now, ultimately as well, we have a daily bullish FEG, which tells us momentum is to the upside. We failed to create any daily FEGs, I believe, the end of last week. So there is a small slowing in price overall. But unless we open up a gap to the downside on the daily time frame, we're just going to remain bullish across this overall direction here. Of course, we can use structure within the slightly lower time frames, like the 4-hour here, and determine the longer term moves becoming reality. But for now, we're looking within this overall range, and we are expecting long price action to be our overall predominant moves this week. Of course, look at each point. If each point does not show you any relevance, then expect the price action that establishes before we get to these points to continue. Remembering that we're not ultimately looking for the new low, the new low, the new low, the new low. We're looking for that shift back into that bias that follows the daily. Now, if price comes down through here, creates a bias to go short on the daily time frame, that's when we'll be looking for pullbacks to take out lows. Always remember, price action doesn't just change overnight. It takes generally a few trading sessions to actually shift into their new bias and new direction. So remember, this was given out on the 26th. This stuff does not have to happen in the space of a week, in the space of a month. We know because of an average daily movement, we should have this at least happen within the space of 2 to 3 trading sessions. But we've had a slow week so far. We don't have a huge amount of red folder. So just keep in mind, very simple relative ideas. Okay, the market moves in a simple way. It's the traders that make it overly complex, in my opinion. Moving on to gold. Again, the same story for gold. We have a ton of literature down here. Well, I say a ton, depends what you class as a ton. We have literature for you guys to read if you want to read it. You can find that on the TradingView account again. So following on from last week, you probably see it here. We called another all-time high last week, and we created that space, and we created that all-time high. But now we're looking at the same relevance here. Now, the only difference is we did create the high, and we came and took out a low within the relevance of bullish price action. Now, the overall higher time frame trajectory is telling us that we're coming up higher, okay? But we have broken down slightly. So there is a possibility for this overall movement, so this downwards leg you see, to become the first movement in a deeper pullback. That's why we have a bit of a lower target here, and we're expanding the analysis out of the initial range itself, because in theory we have broken down, so it's showing us that there is potential for a longer term pullback. Now, there are a couple of things that we need to note here. The main things being that this was a fundamentally driven move. Price also swept liquidity, breaking structure, and then it brought us straight back up into the highs once again, generating more liquidity above the already liquid rich all-time high. So keeping the relevance in mind, we have the possibility for price to come back down into the higher time frame area of trajectory and then push higher. Again, this is going to align with some smaller time frame areas of demand within this. We haven't marked these because this is the 4-hour / higher time frame markup. That is our potential overall if we don't run bullish straight to the all-time high. Now, the reason I don't believe we're going to run bullish to the all-time high straight away is because of this structure break here, as we noted earlier. I believe that we could see a deeper pullback, possibly down to the lower end here. This would bring us back to a relatively high liquidity area, and this is where I'll be looking for the area to push bullish. Now, this is an area of demand, so we expect buys from here. Now, if we don't see any sort of significant movement from here and buys coming back in, then we'll look for the short through down to the liquid low that sits. And ultimately, if that is the case, what we said at the beginning was the downwards moving leg being the first part of an overall deeper shift to give us a pullback that will ultimately bring us down to this low right here. But until we see price action actually do that, I still believe bullishness is the key directional bias here. We have momentum on the daily time frame telling us that bullishness is still in play. We do have potential for selling off, but why would you sell off against something that is making all-time highs? That is the worst thing I've ever heard. Okay, so wait for the sells to present themselves within given areas, and if they do not, then we will wait for an adequate time to go long to follow back to the all-time high that we had before. Now, notes to make: if we do get down into this area of demand, it is going to take a bit more of a significant push to get us back through the previous area of buying pressure and buying movement. So there could well be a reaction here, which brings us back, which pulls us lower. Whether that liquidates the low or not is a different story, and then takes us back higher. Okay. Worst case is you get a buy in here, price moves up and then runs back down anyway. But potential is the only thing that we can sort of lean on, and these are all potential within this current condition on gold. So guys, this has been a brief breakdown, as always, of the 4-hour time frame on euro and gold. We hope that you've enjoyed this, and like I say, if you are looking to join the community, then the links are in the description. Appreciate all the love and support on these videos, guys. It really does let us know that you enjoy them. And hopefully I will see you guys in the Discord live stream very soon. YouTube live coming this week, so keep an eye out for that. And I will see you all in the next one. Have an amazing trading week, guys. And of course, stick to your plan. Always follow your risk.